Hello, everyone. A very good evening to all of you. I'm sure all the participants are equally thrilled and excited for this session to finally know about the secrets of wealth creation. Barack Obama rightly said, wealth is not the only answer, but yes, it does make a difference. It is not about creating money, but it is about having a lot of options for creation of wealth. On that note, I would extend my heartfelt gratitude to the Committee on Financial Markets and Investor Protection of ICI, which is constantly making its best efforts to aware the members about such insightful topics. The committee provides suggestions on various bills and notifications related to financial markets to the government and various other statutory regulators. It also interacts regularly with MCA, RBI, SEBI, IRDA, and stock exchanges on the issues relating to financial markets and investor protection, and also on the role of CAs in that. The objective of this committee is to create awareness amongst the public at large and educating the investors about their rights and responsibilities. It also aims at enhancing the skills of the ICI members and empowering them by conducting various certificate courses as well as countless virtual CPE meetings and webinars. Currently, the committee is working under the chairmanship of CA Charanjot Singh Nandaji. There is no piece of paper or several papers of introduction which can justify the grand aura of CA Charanjot Singh Nandaji. CA Charanjot Singh Nandaji is a Central Council member of ICI. Beside being the member of Committee on Financial Markets and Investor Protection, he is also sharing his knowledge through chairmanship of various other committees of ICI, such as Digital Accounting and Assurance Board, Committee on Information Technology of South Asian Federation of Accountants, and Board of Internal Audit and Management Accounting. In the past, he has also been chairman of various committees like Internal Audit Standards Board, Committee on Management Accounting, Internal Audit Members in Industry, and Women Members Empowerment Committee, amongst others. Additionally, he also contributed to our profession as the guest speaker at the British Columbia chapter of ICI in Canada on IFRS, Effective Communication, and Forensic Accounting seminar. He has also contributed as a guest faculty and program coordinator at various seminars and conferences organized by international bodies and ICI. With that, I would request CA Charanjot Singh Nandaji to say a few words about today's session. Over to you, sir.
Thanks a lot, CA Kaveri Arora, the Honorable Masters of the Ceremony, the respected and revered faculty of the day, CA Umakant Mehta, office, including Mr. Giver, including Mr. Ayaz, including Mr. Animesh, and more importantly, members who have come here to go home more enlightened. Ladies and gentlemen, investment is a proposition where you earn money, you make money. And therefore, the most important thing is to know your mindset and the area where you want to transfer. People normally invest in markets without a direction. It is not that they may suffer losses. At times, they make a lot of money when the markets go up, but they are not able to effectively keep that money in control. When the market starts moving on a different direction, they start losing money in large directions. So you have to understand whether you are an investor, whether you are a trader, whether you are a gambler, or whether you want to go for long or short-term investments. And in case you feel you have no such option, then very candidly, you could go and invest in mutual funds and systematic investment plans. Ladies and gentlemen, in today's session, we have a master of this subject, CA Umakant Mehta, who hails from Chandigarh, who is the past chairman of Chandigarh branch, a person who knows the investments in mutual funds in, out, a person who has over his entire life advised his clientele on how to invest and where to invest. So I will not stand between you and Mr. Mehta. Let me invite Mr. Mehta and let him show his colors, let him show his valor, let him show his technical expertise to you and guide you how proper investment can make you rich. I am very inclined in one of my very important observations. If a person wants to become a multi-millionaire, it is only through stock markets, only through legitimate means of investment in markets. So, ladies and gentlemen, over to Mr. Umakant Mehta for his further proceedings. Thanks a lot. The dice is all yours, Kaveri. Now you can invite Mr. Mehta and take the things further.
Oh, so sorry. So thank you so much, Nanda sir. Full words. It is always a pleasure to learn from you, sir. Without any further delay, I would like to introduce the speaker for today's session, a fellow member of the Institute of Chartered Accountants of India and a practicing CA for more than 27 years. CA Umakant Mehta is also holding the degree of law from Punjab University. He is a qualified peer reviewer under the new system of review, who has also qualified forensic and fraud detection auditor examination, certificate course on valuation, certificate course on arbitration, and certificate course on GST. He was the chairman of Chandigarh branch of ICI and earlier held the post of treasurer, general secretary, and vice chairman respectively. Additionally, he is also visiting faculty for income tax, GST, and financial accounting at various institutions. He is also a member of Grievances Redressal Committee of GST for the state of Haryana, situated at Panchkula Commissionerate. CA Umakant Mehta has vast experience in the field of financial management of different organizations, including government organizations and handling of income tax and GST matters. Now I would request CA Umakant Mehta to begin with today's session. Over to you, sir.
Thank you, CA Kaveri, for your kind words. Respected Charanjot Nanda sir, Mr. Gaver from Committee on Financial Markets and Investor Protection, Mr. Ayaj, and all other participants. I'm very thankful to all of you for giving me this opportunity to present my views in front of you all. I'm very thankful if you give me a very patient hearing. So I am sharing my. Should I share my slides?
Yes, sir.
Sure, sir. Sure.
Is it visible? So my topic is, and we all know the importance of wealth in our life. But sometimes we may be in a hurry, or we are prone to make mistakes. Being chartered accountants, sometimes we are overconfident, and sometimes we are losing patience. But stock market is nothing but to have patience, to stay for long term, to start in a disciplined way. Investment should be in a disciplined way. Only then we can create money. So you must agree that times have changed. Times have changed. We have seen a lot of changes in our lifetime. Our earlier way of communication was how we were communicating, how we were operating our offices. Typewriters were there, old telephone with these dialers were there. Now we are having smart laptops, tabs, mobile phones. So our way of communication, our way of our lifestyle is changing in a better way, in a good way. Earlier means of transport were your railway and ordinary transport services bus. But now the way we are traveling totally changed. We can see Vande Bharat trains. We can see luxurious buses. More and more people are now preferring to travel by their own cars. And you must be agreeing with me that every household has now owning their own vehicle, car or something. Chandigarh is a city where highest number of per capita vehicles are there. And I'm sure this is not the story of only Chandigarh. but other cities too. So the way of traveling, the way of communication has changed, and that too when we talk about cooking. Earlier we used to cook by wooden chulas, and we keep on using different methods for our cooking foods. But now the smart appliances are there for food cooking, and we are having very ultra modern gas stoves for all cooking. Same is the way with our kirana shops. Earlier, we used to go to our kirana shops in the vicinity, but now there are malls. We can order online. So everything is changing. So we need to change because our eating habits have also changed. 2 minutes noodles have taken over, and uh, is Generation Z. G is basically Generation Z is basically preferring fast food like pizza and other things. So earlier thermal power plants were there, but now you can see wind energies or solar energies they are replacing for power generation. So that means you must agree that everything is changing. Now come about our personal life. Earlier retirement was at the age of 60 or 58 if we talk about government sector or any other sector, but now people are preferring to retire early. I have seen so many executives in the companies who are on the higher level. They are retiring at the age of 40, 45, and lifespan of ours is now 90 plus years with healthy and very good advanced medical facilities, which were earlier was around 70 to 75 years of age. Retirement life was only 10 to 15 years, but now span has increased. It is over 30 years. Earlier there were joint families, but now nuclear families are there. Earlier we were dependent upon children. Once we are retired and we were dependent upon children, now more and more people are preferring not to depend upon children, but to have their other sources of passive source of income, other sources of income, so that they can enjoy life after their retirement. At the age of 40, 45, 50, if we are retiring, so we have plenty of time to enjoy our life. So the new generation is not dependent upon children. They are enjoying their life, but how? They are having passive income, which is putting there all the enjoyments. Standard expenses are there. Now aspirational expenses are there. Earlier, our needs were very few, roti, kapda, makan. But nowadays, we are not only having these needs, but our needs are much more than these. Now we need to travel. We like to travel to whole of the world. We try to have good gadgets with us, a good car, and a good house, and all these things. Earlier, it was not there. So earlier our avenues were pension, yeah, traditional avenues like you can say PPF, bank deposit and all, but now people are more and more smart. Now they are going towards market linked avenues. Traditional is also there, but they are more and more dependent upon market linked avenues like mutual fund, stock market, and other things. Yeah, have the time really changed and add to investments too? Yes. My answer is yes. So still, what we see is when we are talking about all these things, everything has changed. But if we go through this thing, we will see that 80% of our property, bank deposit, and gold. People are still preferring property and gold and bank deposits to market. Market means equity investments. Still, only 4.8% people in India are investing into equity markets, and more people are considering gold, bank deposit, and property to be a safer bet. And that was a talk of yesterday, and even today it is the same situation. The things have not changed. So everybody has witnessed, and during Corona time also, the market from 25,000 BSE Sensex from 25,000 has risen to 62,000, and everybody has made lot of money. They have created lot of wealth. Not wealth, but rather they have made. Why low investment in equity? The reason is people are afraid of downfall in the equity market. People think if their principal money is not safe when we talk about equity market. So whenever there is fall in the market, everybody just outflow is much more than inflow. And when there is, you can say, bull phase in the market, everybody keeps on investing. Though there is a general principle, when every Tom, Dick, and Harry is investing into the market, you should stay away from the market. And when people are afraid of the market, you should invest in the market. But people are doing the other thing, the opposite things. So, but one thing is sure: whenever there is barrier, like Corona was there, like dot-com bubble was there, Iran-Iraq war was there, and any other thing, even geopolitical turmoil was there. You could have witnessed that market has, if market fell, then it bounced back in a very faster with accelerated speed. So nothing to worry about, but people are still not convinced about the market. That is the reason why there is no investment in the equity market. So every downfall in the market is a good opportunity for everyone, and the only mantra to make money out of the market is to stay for long terms, to have patience and patience only. So when we talk about market, so how to come out of the fear of this thing? We cannot change the psychology of the public, but SEBI and RBI, two regulatory bodies, are doing their best to take steps towards investor protections. So SEBI has introduced a number of regulations to ensure transparency, and every day or two or so, they are introducing one or other measure to do all to curb any malified intention of any of the persons, and to introduce transparency measures in the market. The main thrust of the SEBI is to educate investors, to tell them why market is better. And AMFI, Association of Mutual Funds in India, is also running the campaigns awareness campaign among the masses to tell them how mutual funds are beneficial to them. Now, SEBI is also going to introduce uniform expense rates across all mutual funds, which will be beneficial for the investors. Now, whenever you are, you or me or you are investing into the market, into mutual funds, there is a portfolio manager who is basically managing your investment on our behalf. So when he's managing investments, so he must be charging some fee. So that very fee, so that more and more money of the investors be invested into the market, and they are burdened with lesser and lesser expenses. Now, currently, the expense ratio is around 1.3% of the total cost. So, by these means, when your more and more money will be invested into the market, and expense ratio will be low, that will be beneficial to the investors. The main thing what the public is facing is whosoever is having their accounts in banks and having good amount of money, bank officials are having full access on their money. When they are having full access on the money, so they keep on tracking the accounts. High net worth individuals are given calls, and even bank managers are visiting their houses, or relationship manager is visiting them personally and convincing them to start one or other mutual fund scheme. So they are basically fulfilling their targets. They are not aware. They are not concerned about what mutual fund scheme is better or the insurance scheme is better. So just they are putting up the money of the public at large into mutual funds and insurance without any advisory function, which is basically given a bad name to MF industry. So RBI has recommended the verification of selling of third-party products by audit function. So they are mulling the option of audit of all these products, third-party products by the banks, so that true and fair advice can be given to the bank client, or bank person shouldn't force anybody to invest into the schemes for which even bank officials are not aware of. So it is important to change ourselves with time and choose investments over savings for wealth creation. So what savings are and what are investments? we have to look into before going into wealth creation aspects. Investment, anything which is giving money to us, is from which we are earning some income, is called investments. So investment is an asset or item acquired with the goal of generating income or appreciation. So when I am going to invest in the bank deposits, so FDR is basically investment, and that is giving us income by the way of interest. So when bank FD is same way, mutual fund is a asset, and that mutual fund is giving us income by way of wealth, more than of a good period. So for a long period, our money is appreciating, and that appreciation is basically nothing but income from mutual funds. That is mutual fund is asset, and we are deriving income by way of appreciation in mutual funds. So savings are basically, they are the passive things. We just keep the money, and money grows at a specified rate, which is specified. Suppose if we have put our money into saving banks and it is pertinent, it is we are definite that we will get to 2.7% to 4% return in our saving account, and we have not to do anything. It will be automatic. But in case of investments, we should be aware of all the things. We should be aware of the thing, which asset, which particular scheme is better, and we should invest in that asset, maximize our wealth. So we have to take active part in this. We should be active, and this is a passive thing. It will grow on its own without any efforts of ours. So saving is without our efforts, and it is passive. In savings, we are sure that our principal is protected, and we are getting over and above the principal amount. So surely I will get 5, 6, 7% of rate of interest, but that is not the case with the investments. In investment, we have to choose our vehicle. We have to choose our asset in a proper way so that we can have higher financial amount, and that is why in this risk is very high, because volatility is there in the market. Market keeps on making up and down. Whenever we go to health checkups, we also undertake ECG. When ECG is flat, that means person is normal, right? So the same is the case with our investments. If market is flat, that means there is no charm in the market. You are getting constant returns. Then why you will go to a market? So every up and down the market is basically just like ECG of a human body. So when there is up and down in the market, that shows that there is potential to earn out of your market. So every downfall in the market gives you opportunity to make higher returns. So when you keep on going through all these ups and downs in the market, so you will getting a benefit of rupee cost averaging. So suppose I am going for a systematic investment plan in mutual funds. So every time I am the buyer in the market till I withdraw my money. Let's suppose I invested for 10, 15, 30 years, 20 years, 30 years. So that means I am every stage. Deep trading will play a crucial role in my investment journey. So rupee cost averaging will help me to reduce my cost of acquiring any mutual fund units. And when I am, that will be at higher rate. So my rate of return will be high, my risk is mitigated, and I will get the benefit of compounding. Compounding means interest on interest. So when my period is long, then I will definitely get a sufficient and a very handsome amount of compounding in my hands, which will help in creating wealth. In case of savings, I can sit quietly at my home, and automatically my investment will generate return for me, so return will be lower, but I can increase my wealth, net worth, by investing into mutual funds. The only thing is that I have patience and I must choose good type of mutual fund schemes. It's a very short term, 2 years, 3 years, 4 years, 5 years, but investment is always with a goal. Goal is attached to mutual investments. Suppose I want to make a retirement kitty. I'm 25 years of age and I want to work only for next 15 years. So what I will do is I will start SIP regularly in any of the schemes, and my aim is to create this much wealth, 5 CR, 2 CR, 10 CR. So I will work towards increase putting my money into SIPs, and after 15 years I will achieve my target. I will quit my job and I will enjoy my life like anything. That is long-term period. Returns are very limited in case of savings, but in case of investments, potential is huge. You can earn handsome amount of returns, and equity returns, mutual returns are giving double-digit returns handsomely and with tax-efficient manner. But the only thing is, I'm again repeating, keep on repeating this thing: patience and long-term horizon. In case of savings, there will be no loss. If you have rupees 1 lakh to invest, and you have been given 4%, 7% rate of return, you will definitely get that amount of return. But in case of investments, that is not the case. There can be loss, there can be gain. But suppose your horizon is low, is lesser. You don't have patience, and if there is downfall in the market, you are afraid of downfalls, and you withdraw money, so you may face loss in the market. The aim in case of this saving is to have wealth preservation. Whatever capital amount you are having, that should not decrease, that should not be in a negative. So you keep on investing into fixed deposit scheme, fixed amount interest bearing schemes. But because our aim is wealth creation, higher the risk, higher the profitability. But higher the risk, higher the profitability. But when the horizon is longer, then definitely risk mitigated to a very great level. So we are talking about types of investments. FDs are there, bonds are there, gold, stocks, mutual funds, PPF, national pension scheme, exchange traded funds, real estate, post office schemes. People are having more and more when we talk about fixed income schemes. So people are having much faith in fixed deposit and post office schemes, because they are sure that they will not let your principal to go negative or go down. So your principal is protected. But nowadays, not only this is not the time to think about protection of principal, but to create wealth. So nowadays, people are investing into stocks and mutual funds. There is difference between stocks and mutual funds. Both are basically equity. Stocks are termed as direct equity, and mutual funds are basically treated as indirect equity. When you are investing in stocks, so you should invest only when you have full knowledge of analysis of financial statements. If you can analyze statements in a better way, and you have time to analyze financial statements of each and every company to know about the ins and outs of the companies, earnings of the companies, credit parties are, what practice they are following, what their competitors are doing, each and everything you need to have. But for that, you must be having plenty of time. Being chartered accountants are not free enough to study so much in deep. So if we can study in deep, we have plenty of money, and we can bet upon 1, 2, 3, 4 stocks, and we are ready to take risk, then stock market is very good. You can go directly for acquiring of shares. But if I'm like me, I'm a practicing chartered accountant, I'm having professional commitments. Market is open by 9:15 in the morning and closed at 3:30 in the evening. I'm busy with my clients. when I'm busy with my clients, so I'm busy in my professional work, I may not find time to look into the market. If I am going in, I'm basically investing into F&O, so I may not be in a position to take call what to go about, uh, put or call. I may not find time. So it is better for a person like me who's busy in my profession to go for indirect way of this equity, that is called mutual funds. In mutual funds, a person, a qualified person, a capable person, a person with full knowledge is called portfolio manager, who is basically in managing all your investments on your behalf. And what you are paying 1.3% of total of your investment as expense ratio. So suppose I'm investing 100 rupees, so my 98.7 rupees will be invested into market, and 1.3 is the ratio which expense ratio which company will charge for services offered to me. So I think if I am getting good return, I'm getting return of 2 digits with a long term horizon and with the patience. I think it is a good return. If I compare it with RD, which is giving a return of 5.8%, MIS 7.81%, and senior citizen savings scheme 8.2% they are giving, and all these schemes are taxable. But in case of mutual funds are very tax efficient. Number one. Number two, in case of mutual funds, first 1 lakh of gain is totally exempt from tax, and the balance gain is taxable at the rate of 10%. So basically, and when I have to pay tax, only when I am withdrawing money out of mutual funds. If I am not withdrawing money from mutual funds, I'm not forced to pay any taxes till my money is invested into into mutual funds. When I withdraw, I have to pay tax on profits. And in case of profits also, first 1 lakh profit is exempt, and the balance profit is taxable at the rate of 10%. So that means, though I am in a tax bracket of 20%, 30%, but still I need to pay only 10% tax. But in case of fixed deposits, suppose my interest is X amount, I have, whether I have I have withdrawn the money from fixed deposit, or my fixed deposits are still continuing, and interest is basically added into these fixed deposit, and I'm not using that interest. Even then, I have to account for the interest in my income. So if I'm in 30% slab, my fixed deposit interest will be taxable at the rate of 30%. If I'm in the tax slab of 20%, so my interest will be taxable at the rate of 20%. So I'm whether I'm withdrawing or not withdrawing my interest amount or my FD amount, but still I am forced to pay taxes. But in case of mutual funds, till date I'm not withdrawing, no tax. And if I withdraw, first 1 lakh is exempt, and balance 10% tax I have to pay. So I can say it is very tax efficient thing. Even in I am in need of 10 lakh rupees. So if I have invested that amount, I have invested some amount in real estate. So my house is of 1 CR, 2 CR, 3 CR. I need only 10 lakh rupees. So it is not feasible for me to sell one room of my house, or the kitchen of my room of my house, or courtyard of my house. So I have to sell all of the house just for 10 lakh rupees. But in case of mutual funds, I can sell a small part of my units easily in the market. Same day, these will be sold, and within next 2-3 days, money will be in my account. But in case of real estate, you need to have longer period to sell or to acquire a property. If you want to sell, you need minimum 3 to 6 months to sell. Look for a good buyer which can give you the rate you are demanding, and this amount may sometimes create financial problem to you. But in case of mutual funds, if you need a small amount of money, you can start with small amount of your units, and money will be credited to your account within next 2-3 days. So now our topic is wealth creation. So we are coming to wealth creation. So the easy way to create money is mutual funds. Why easy? Because without disturbing your day-to-day needs, without disturbing your day-to-day deeds, what you can do is you can invest money into equity market through the second option, through indirect way of investing into market. So somebody is, you are basic, what you are doing is, there is asset management company. That asset management company is calling for money from number of people, and all people, these persons are pulling their money into one particular scheme, and that scheme is investing into securities like stock, bond, money market instruments, and other assets. So mutual funds are basically the things which are managed by, operated by professionals, portfolio managers. They are licensed by SEBI in this regard. This mutual fund portfolio is structured and maintained to match the investor objectives stated in its prospectus. So the thing is, I have to see what mutual fund scheme is suitable for me. There are so many schemes. Every AMC is running so many schemes, so I have to choose between 38, from 38 to 40 schemes. I have to choose which scheme is better. So I have to choose that very scheme which is suitable for me. There are different types of mutual funds. If we go by structure, there are open-ended schemes, closed-ended schemes. Open-ended means I can enter at any given time, I can exit at any given time. So whenever I need be, I can enter. When I want to exit, I can exit without any problem. There is no nobody to ask any question to me. I can just withdraw. That is called open-ended. Close-ended. Close-ended means there is a window when I can enter, and after the expiry of certain time, I can withdraw. Like ELSS schemes, equity linked savings scheme. These are the tax schemes which are covered under 80C. In these schemes, there is a window of 3 years. So if I am investing today, so I have to stay for 3 years. Before 3 years, I cannot. Before the expiry of 3 years, I cannot exit from that very scheme. That is called close-ended schemes. There are some of the schemes like there are pension funds are there, mutual pension funds are there, which are having 5 years close window. So if I have invested today, I cannot withdraw money before the expiry of 5 years. These are called close-ended schemes, where I can enter up to a certain date, but I cannot exit before the expiry of the period which is stated in that very thing. So the other thing is by investment objectives. So by investment objectives, there are schemes like equity schemes, debt schemes, money market, and gold. Equity schemes are further divided into large cap. Large cap means जो BSE 30 shares हैं, BSE 30 Sensex. So, BSE Sensex. Large cap is the companies which are are over certain market cap. All big companies are large cap. So the mutual schemes which are investing into big companies is called large cap. Then mid and small cap segment, small companies or mid sector companies are called small cap funds. Multi cap, which is having blend of large cap, mid cap, small cap, is called multi cap. Sectoral or thematics. So if I am basically investing into power sector, I'm investing into finance sector. These are called sectorial or thematic funds. Debt funds can be of type gilt. Gilt means government securities. So debt fund is of government securities. It can be bonds, long-term bonds, short-term bonds. So it can be like this. Money market, ultra short. I am having money to invest for 3 days, 7 days, 10 days. So these are called ultra short. So I can invest for 3 days, 4 days, 5 days. These are called ultra short money. And the other thing is liquid. Liquid is basic. Liquid fund mutual funds are there where I can keep my money for 7 days, 15 days, 10, 30 days, 1 year. It's up to me. There is no charges to enter into or to exit from these mutual funds. And there are gold mutual funds, and generally they are exchange traded funds. So gold funds, basically with exchange traded means I can invest into these funds through online methodology. So debt funds can be of like if I want to park money for 0 to 3 months, I am having some surplus money and which I want to park. Instead of parking into saving account, I can park in debt funds from 0 to 3 months, which may give better return as compared to saving accounts. Then there can be some of my goals where I may be needing money within 1 to 3 years. Suppose my son or daughter is pursuing engineering, and within the next 1 to 3 years they are going to acquire their degree and to start their own entrepreneurship. So I am needing money in the coming 1 to 3 years. Instead of going to this equity market, I will go get funds, because I am already telling you there is ups and downs in the market. So in the case of equity, our duration should be the longer one. Horizon should be longer, 10, 5, 10, 20 years with some goal. So in debt fund, if I need 1 to 3 years, so I will prefer debt funds, so that when I need money after within 1 to 3 years, I can withdraw and utilize this money in the things which I need to. Then there are goals which may be fulfilling within next 3 to 12 months. So maybe I have to get my child's admission in any of the good schools or colleges. So within 3 to 12 months, I am planning. I am basically investing in debt funds. I may be in a process to send my ward out of India. So this will take 3 to 12 months. So I may be parking this money in debt funds, and then I can utilize that money to make my ward to go out of India. And there can be goals which cannot be deferred, which can be fulfilled within 3 to 4 years. So in that case, I don't want to delay them, so I can invest money in debt funds. So I already talked about equity funds, thematic funds, index funds, equity diversified funds, dividend yield funds, sector funds, ELSS. ELSS for tax saving. Thematic is basically thematic, and the sector fund is basically when I'm basically investing into a scheme, like I'm investing into power sector, I'm investing into financial sector, I'm investing into banking sector. Index funds are basically which we are called basically exchange traded funds. Equity diversified means the funds which are related to equity, like large cap, small cap, and dividend yield funds which are giving us dividend. So here one story is there. This leap of faith. We must have faith in whatever is there in the store. One person was traveling and he lost his way. He enters into a desert, very much dejected. There was no person far within his sights. Whenever he looks far away, no house, nothing there. He was very much dejected, and hot. Weather was very hot, and he was thirsty. He was carrying a bag in which water was there, but as a desert was too long, in water get finished. He was feeling very thirsty. It was very difficult for him to travel. So he keep on traveling. He was semi-conscious or like this, and finally he saw a old building, and he rushed towards that very building. After all his attempts, he successfully entered into that building. When he entered into building, he saw a hand pump. When he saw a hand pump, he was very much happy. And when he tried to pump it out, there was no water. A small bottle was there, in which only very few drops of water were there. He just picked up that bottle and tried to drink the water, but still, before he can do that, he saw a chit on the wall. Chit was there. In this chit, it was written, pour this water on the hand pump and the water will flow without any default. Means thereby, now he was in a dilemma whether to drink that water which is there in the bottle, or to pour this water on the hand pump as per the directions given in the chit. He was very much confused. Ultimately, he had his conscience told him to have faith in what is written on the chit, which was there on the form. What he did was he poured that water which was there in the bottle on the hand pump. The moment he did that, hand pump started giving water flawlessly. He was very much happy. He drank water. He had a bath over there. He looked very fresh. He then what he does is he filled his water bottle and thanking person who has written this chit, he left for his journey ahead. So the thing is, what he has done, he has shown his full faith on the chit which was written on the wall. So that is the thing. We should have faith in equities. It is equities who can compound wealth. No other asset class can give you better wealth creation than equity. If we see this chart, which is in front of you, November 2002 till November 2020, that means full 20 years. If you see 10,000 rupees, growth of rupees 10,000, the person who has invested 10,000 rupees in November 2002, and after 20 years, if we see our yellow, you can say our orange line is of yield index. So gold yield index, gold securities index has given us only return of 5.8 compound annual growth rate. That is our 10,000 become 3 times. That is 31,136. Whereas gold has given us a 9 times return. So 10,000 become 93,000 and a compound annual growth rate. Faith in equities, and equity is the only thing which has given us growth of 26.1 times. That means our 10,000 became 2,61,000. That is a CAGR of 17.7%. If we talk about inflation, if we talk about taxation, even then our return is in double digit. So this is the only asset class which is giving us good return. So we have to have leap of faith. We must have faith in our equity class, which we are lacking till date. So the faith is a paramount in case of equities. Even if we have seen the earlier chart, still we can see equity is just 4.8% people are investing into equities. This is data of 835 lakh crore total Indian household assets in March 22. Still, even though people have witnessed a huge amount of gain during corona time, when they were sitting at home for 2-3 months, they have seen market growing leaps and bounds, but they are still lacking conviction in the market. They are not having faith in the market. Faith is the key to success. So one must have faith in equity market. In India, equities are ignored to larger extent. In US, 45.5% people are investing into equities. In Spain, 42%, Canada 37.9%, and so on. Taiwan 20%, Australia 18.6%, South Korea 18.1%. India is the only country where household equity exposure in financial assets mean, why I'm talking about equities, it is only 14%, and of 14 out of 14%, the share of equity is hardly 5%. So you see the lack of conviction, lack of faith in equities. The faith is a thing which can give you good returns. We fear downside. That is why equities investment is very low in India. The chart is in front of you. It is from 1998 to 2022. That is good 25 years picture is in front of you. And you can just see out of these 25 years, only 6 years when negative returns are there, minus 18, minus 15, minus 16, minus 52, minus 25, minus 4%. That means 6 years negative returns is there, and which ranges from minus 4% to minus 52%. But there are 19 times when 67%, 3%, 72%, 11%, 36, 40, 55, 76, 18, 28%, 7%, 31%, 3%, 29%, 3%, 12%, 15%, 24%, 4%. So overall taken together, it is a range of 3% to 76%. Means thereby in 19 years, you are getting positive returns. If we see, or if we club it together, we can just make it out that in 25 years, from 98 to 22, we have got average, on an average, 11.9% compound annual growth rate. No other asset class can provide us this much growth rate. Because we lose out by trying to time the market. What we start doing is, when it is time of equity market, we start giving our expertise. We start timing the market, which is very difficult to time the market. Even Warren Buffett is also the opinion, he never timed the market. Let the market behave in its own way, and you just follow the longer period path in the market. Have patience, then you will definitely make money. But people start timing the market, and you see, when there is a price correction or fear, outflow will be there, and when there is uptrend, there will be inflow in the market. You can see in financial 11, there is outflow. Financial 13, there is outflow. March 2008, when there was a subprime factor in US market, if I talk about Sensex, it fell from 21,000 to 8,800, and even your Nifty 50 crashed to 4,000. And in the year 2022, it was around 14,000. So when market started rising from 7,000, from 8,000 to 14,000, inflow increased in the market. So in financial year 2022, the inflow in the market was 2,90,379 crores in equity mutual funds. And earlier, 2008, there was outflow from the market. When market is down, people are coming out of the market. When market start increasing, people tend to invest in the market. The position should be the other way around. When people are coming out of the market, it is good opportunity to make money. One must invest, but nobody was investing it at that time. And when market start moving up, then greed comes out of everybody, and they start investing into the market. This is not a good thing. It is, you can never time the market. Long-term investors play despite short-term volatility. Just see, monthly SIP of 10,000 in a particular fund. I cannot name any of the funds because I have taken the whole of the average of whole of the industry. So the thing is, I am not specifying any particular scheme. I am not a brand ambassador of any of the schemes. So I am giving you an average picture of everything, which you can verify from the that also. So monthly SIP of 10,000 in a particular fund, since inception, has grown the total investment by 31 times, despite witnessing many market downturns. So just see this chart. It is from September 94 till December 2022. That means you can say 340 months on an average. Okay? So 340 months ho gaya from September 94 to December 2022. 340 months. So SIP value of 10,000 means from September 94 to December 22, tested around 34 lakhs per market, 34 lakhs. Now, what happens is in 2001 there is dot-com bubble, Y2K. We were also talking about. You can say this is your IT scam was there. So Y2K, then you can say dot-com bubble. So the market went down and it fall by 48%. So then what happened? It start moving up, and then there is January 8 global financial crisis of the prime factor of US when there was a hue and cry in whole of the world, and Indian stock markets crashed it very much, and you can see a red mark, that is downfall in the market. Then market started going up, and then Eurozone debt crisis and US rating downgrade were there, and the market fell by 19% in October 10 to December 11. And you can see red line over there. Then there was COVID-19 pandemic, and the NBFC crisis was there in September 18 to March 20. March 20 was the time, 22nd of March, when first time on the Indian television, Prime Minister Modi announced Janata Curfew, and from 24 to midnight, there was a lockdown in the country. And you see, at that time, market fell. The third point is market fell by 35% from September 18 to March 20. But again, it hit back and risen to a greater height. And by December 30, 2022, market was at their all-time high of 62,000 plus. So you see, we have invested 34 lakh rupees in the SIPs. Market value of SIPs was 10.5 CR, yani 10.5 crores, and giving us a CAGR, compound annual growth rate, CAGR of 19.7%. Market value of SIP in benchmark. If we go, benchmark is Nifty 500. Nifty 500 is the best 500 companies in the Indian economy. So Nifty 500 benchmark was giving 14.7% return, but our SIP has given us a value of 90.7%. Why? Because we kept on investing at any given time. When there is fall in the market, we were investing. When there was upward trend in the market, we were investing. So rupee cost averaging. So our is the return what I have earned is 34 lakh has gone up to 10. Now here it's time for the second story. Consistency is the key. Consistency means you keep on doing your work without perturbing yourself, without listening to anybody, and without giving heed to anyone. So just see, a child was there. When a person was child, he kept on lifting calf. Then he keep on growing, and ultimately when he has fully grown, he kept on lifting buffalo. So that means how? Because he kept on practicing. So consistency was there. Start small and be consistent. Whatever you have started, follow that thing in a way. Don't listen to any, and that too with conviction, with full conviction, with full force, and with consistency. You have started small, but that small will turn up into a big one day if you are consistent. So step 2 is step it up. So earlier you were having calf, then developed one, and then the fully developed buffalo. So consistency is the key in any of the case. So these rules apply into investments also. Always try to invest as soon as you can. It is possible you to invest. So, and I have just joined my job. The moment I have joined the job, I have time to get married. So, liabilities on my shoulders are very low. So, it is always for me to start investing into the market. So, SIP basically gives me a direction, a discipline, a goal to which I can associate my SIP. So, what should I do? Must start investing as soon as I have got a job, or as soon as I have some money, spare money with me. I must start investing, though it is a very small amount. So, whatever the amount I am going to decide, I must start investing in that very amount into equity market by way of SIP. Why SIP? SIP means every month I have to invest at that very particular date. That means when I am investing in that very particular date, this means if market is up, market is low, my investment will go. Ultimately, this will give me ups and downs in the market will give me average benefit of cost average. So rupee cost averaging benefit will be given to me. So my money will grow at a good pace and I will get a good return out of my money. Invest early, and when I'm talking about SIP, that means every month it will go. So by default, it will be regular investment. So I should not break that investment which I am giving it, which I am making. Whether there is a downfall in the market, havoc has created, twin tower incident is there, or global financial crisis there, or any other thing, I should not be there to discontinue my investment. You see, whenever there is a change in 2014, there was change in the Indian political scene when one party lost and the other party captured the position. Still, my market is not going to, you can say effect may be there, but for a shorter period, not for a longer period. So I must keep on investing regularly. I should not put any break on that. Or my horizon should be a long one. My investment must be linked with a goal. So goal should be there. Goal can be education of my wars, my foreign trip, or buying a house, or my retirement kitty. Whatever the goal is, but I must have a goal. Only to achieve that goal, I must keep on investing, and that will give me strength to not to follow any of the adversities in the market. So whenever inflation, the other thing is taxation. So inflation is there. So if suppose if 5% inflation is there in the country, that means if I am having 100 rupees today, so tomorrow if I want to buy anything, that will not cost 100 rupees to me. 5% inflation means it will cost me 105. So that 100 rupees if I am having with me, I must invest in such an instrument, which will give me 5% tax-free return, so that I can beat inflation. So my money value, principal value of my money should not decrease. So 100 will remain 100. When tomorrow I want to buy something, it will be of rupees 105. So I must be having 105 with me. From how I can get it? When my investment will give me 5% tax-free return. The other thing is taxation. Suppose I'm having 10,000 rupees with me, or 7% rate of return is there. So 700 I have got. So when 700 I have got is, so I'm into 30% tax bracket. So 210 will be my tax. So when 210 will be my tax, what will happen? My effective return will be not 700. It is 490. And if I take into account inflation, 5% inflation means 500. So 500 inflation, 210 taxation. So 710 money is the figure comes out to be 710. But I have got 700. So that means my money now I am not having 10,000. I am having 10,000 minus 10. 710 minus 700. 710 how it comes? 710 means 5% inflation 500, 30% tax 210, 710. But I have got 700. So my money has reduced Though I am not considering real return or I'm not taking into account the taxation, but I have to. So my 10,000 will not be 10,000, but it will be 10,000 minus 10, 9,990. So my capital has eroded. So in case of equity, equity is giving you return, which is sum total of your inflation plus taxation. It will give you over and above the sum of these two things. So in any given circumstances, you will get a handsome return, which will take into account your real return as well as taxation of your amount. Follow asset allocation. What it means? It means you have to diversify your assets. Means thereby, suppose I am of the age of 25. So I am having 100%. What should I do? I should 100 minus 25. 100 is age. 100 minus age. My age is 25. So 100 minus 25. 75% of my money should be invested in asset class. Other asset class can be gold, can be FD, can be bonds, or can be any gilt securities or any other security. Why? So that you have taste of each and every asset class, and you should not feel let down at any given time. Though I'm very sure in the long term, wealth creation can be done only by equity, but you must have taste of other asset classes also. And when your age is increasing, your liability will also increase. At the age of 25, you may be single, then you will get married, you will be having your family, and then you must be investing into the education of your children and all. So you must be having some amount of fixed securities also, so as to take care of all the rising expenses. But after 50 years of the age, 50% of amount should go to equity and 50% amount should go to other assets, so that there will be balance in the life and you can have good amount of amount invested into equity, which will grow to a handsome amount, beating out your goal which you have set. Don't time market. We have already seen. Don't try to time the market. Market behaves in its own way, and there may be ups and downs in the market. Don't get out of the market when market is low. Don't rush into market when market is very high. Behave in a rational way, and every time is a good time to invest into market. The market which is today at 62,700, I am talking about BSE and Sensex. It was 100 at the time in year 1979. It has already given you a handsome amount of of return. So from 100 in 1979, it has grown to 62,700 or 800. So this is a very, very, very huge amount which has been given. The thing is, never try to time the market. Manage cash. How? What does it mean? It means if you are having 100 rupees as your income, if you are having 100 rupees with you as your income, what you should do? You should do one thing. Break your amount into 2 or 3 things. The first thing is your household expenses. Second thing is your EMIs, and third thing is your savings or investment. Out of 100 rupees, your expense should not be more than 30 to 35%. Your expense should not be more than 30 to 35%, and your EMI should not be more than 30 to 35%, and the rest 30 to 40% should go for investment. You must save for future, for your goals, and that should be into equities. So if I'm having 100 rupees, don't put all the eggs in one basket. That means if I'm having 100 rupees, I will spend not more than 30 to 35%, 30 to 35 rupees on my household expenses, and another 30 to 35% for EMIs of my house, car, or any other asset which I have bought. And the rest of amount of 30 to 40%, whatever the case may be, it must go for investment. It must you must save for your goals. And all these rules, 8 rules of investment, if you follow, you will definitely get money. Be consistent, invest regularly, and then step it up. So we have already seen from September 94 till December 2022, there were 340 months. So total amount of rupees 10,000 per month noble SIP, we have invested 4 lakhs, and it had grown to 10.5 crores. That means giving us external uh, rate of return of 19.7%. So this is giving us rate of 19.7%. Now think of other thing. Every year you are getting some increment. If you are getting increment, why not your SIP should be incremental also? If you have got 10% salary hike, that we decide to increase our SIP by 10% every year. So if I go for incremental, stepping it up of my investment, I am going to invest regularly and then step it up. Step it up means SIP of 10,000 rupees per month with 10% yearly increment in the SIP. Step up of the SIP by 10% per month. So today I'm investing 10,000. Next year, from the start of next year, I will start investing 11,000 per month. And next year, I will invest 12,100 and so on every year. So when I'm opting for top up SIP, for incremental SIP or step up SIP, that means if there is normal SIP, 10,000 per month for 34 months, the amount comes out to be 340 months, comes out with 34 lakhs, 10.5%. External and internal rate of return of 19.7%. And if I am going for incremental SIP, step up SIP, I have invested 1.64 CR, 1 crore 64 lakhs, and my corpus will be 17.8 crores as on 30th of December 2022, which is giving me external internal rate of return of 19.1%, which is a very handsome amount. And see, just by increasing SIP every year by 10%, I am able to generate 7.3 crores extra money by just adding 1.3 crores extra into kitty. So it is always better to invest regularly and step it up every year by 10%. So now we come out to story number 3. Why does a car need brakes? All of we are driving cars, and we drive at a speed as per our fun. We drive sensibly, following all traffic rules. So why does it need brakes? There can be 1, 2, or 3 reasons for that. Some people will say to stop the car, other will say like other way, but I'm little bit different. So why car needs brake? We're having very good car. You see a luxurious car. Speed limit is 0. Speed limit is 20. Drive slow. There are many such brakes in life. My answer to this thing is, why does car need brakes? Means so that I can drive a car at a good speed. So when I can drive car at a good speed, if there be any obstacle, I can control the car by applying brakes. So why brake is needed? Brake is needed to have control over the car. So this type of brakes are also needed in our life too. So sir, I am taking a break of 10 minutes. Hello? Hello, I am taking break of 10 minutes. I will be back by 7:25.
Sure, sir.
Sure, sir. We'll continue at 7:25 then.
Yeah, thank you. Thank you. Thank you very much.
Yeah.
I'm starting. So we're talking about why car does car needs brakes. So car can. I'm of the opinion that car needs brake so that I can drive at a good speed, which gives thrills to me. So that if there be anybody in front of my car, I can apply brakes. I can be safe. So that way, in economy, there are so many brakes in our life, which stops us or restricts us, and that is the case with the share market too. Just see market ups and downs or corrections which act like brakes. Attack on US World Trade Center 2001. Market in that very time when that was there, market was down by 43.2%. And that was the time 30th of September 2001. After a year, post-crisis, in the very next year, market jumped back by 22.1%. In next 3 years, market was up by 40.4%, and in 5 years, market was up by 41.9%. That is another case. SARS outbreak or Iraq war, you can say 2002, 2003. At that very time, market was down by 11.4%. That was 30th of June 2003. Then in the very next year, market was up by 43.8%, 3 years 45.5%, and in 5 years, market was 31.6% up. BJP unexpectedly losing elections. That was a time when Shining India slogan was there. In 2001, everybody was very much sure that that BJP will definitely will win the elections, but outcome was totally different. And Sonia Gandhi, Congress under the leadership of Sonia Gandhi and Manmohan Singh being the prime minister candidate, won the elections, and market was down by 24.4%. But that very next year, market was up by 53%. Next 3 years, market was up by 45.5%, and 5 years afterwards, market was up by 26%. So all these are breaks. Global financial crisis 2008, that is called subprime factor crisis, was there in US when market was down by almost 55%, and market was down by 57.7%. 31st of December 2008 timings. And anybody invested at the time of 2008, the very next year market was up by 91%, 3 years 17.5%, and 5 years it was 17.8%. European debt crisis 11-12, market down by 26.8%. Investment date was 31st of December 11. Very next year market was bounced back by 33.5%. The next 3 years, market was up by 24.9%, and within next 5 years, market was up by 50.5%. Taper tantrum 2013, minus 10.1% market was there at that time, and then in very next year, market up by 9.6%. 3 years, market up by 10.4%, and then in 5 years, market up by 7%. Brexit, when UK announced its exit from European market. That was in 2016. Market was down by minus 11.9%. And then very next year, market was up by 20.9%. In the next 3 years, market was up by 12.8%. And in the next 5 years, market was up by 15.4%. COVID pandemic, market was down by 20%. But then very next year, market was up. Geopolitical crisis in 2022, market was down by minus 17.5%. But now market is again in 2023-24, market is again catching up. Now it is also again showing the signs of coming back, bounce back. That means it's going to catch uptrend. Why not market is to catch? You see, we are now leaders in the world. UPI. We are having UPI transaction per day transactions are much more than what digital payments done by Germany in a month. What we are doing in a month, in a day, Germany is not doing a digital transaction even in a month. The UPI is the only thing known to Indian which is not known to other persons in the world. US is not aware of what UPI transactions are. And even in US economy, cash is frequently being used, and they are not aware of UPI transactions. Digital payments, India has taken like with a stride. India is doing well in digital marketing. You see our road network, such a good road network is there, which is saving our fuel cost, which is saving our depreciation cost, which is saving our perishable goods, which is now quadrilateral corridor is going to give new heights to our storage, to our movement of goods and services, to our goods. So that may we are GST collection. See the GST collection. Month on month, GST collection is touching new heights. So all these are the signs of economic growth. And when in each and every country of the world, there is a talk of recession. India is the only country which is still showing a good GDP growth rate. Even in if you see about the figures which have been released 10 days before only, our GDP growth was 7.2%, and we were the leader in the world. And the second best country after India was 4.3%. That means we are again at the front of GDP growth rate. We are leading. More and more nations are looking towards India for their consumption. India is having good amount of population, young population, their working population. That is pain for India. You see, when we are having a population, we are world's number one country as far as population is concerned. But this population is turning out to be a boom for us. Why? Because consumption theory is getting satisfied. Whatever we are going to produce, whatever everybody is going to produce, it is being consumed very easily here. Kia cars, MG Hector, Hyundai, all these cars, Maruti, then Tata Motors, they are giving good sales figure month on month basis. Even in the month of May, each automaker like M&M, Tata, Maruti, Hyundai have shown their figures increased by 16% to 25% year-on-year basis. So that is an indication that people are having money. Go to airport, you can see witness rush like a railway station. You cannot catch flights because there are so much rush in the flights. You have to wait sometimes. Hotels are totally booked. Even after COVID, hotels have increased their tariffs, but still you see they are full, having room occupancy ratio of around 90%, which is a very huge figure, and that show Indian economy is growing. And when Indian economy is growing, means thereby how economy grows when their business is doing well. And when business is doing well, your equity, your share markets are bound to do good. And this is a signs that in next coming 10 years will be of India and India only. And anybody is investing into equity market is bound to get good results, will have its money to be increased at a higher pace. Asset allocation is also a play. When I talk about asset allocation means don't put all your amount in one asset. Diversify your assets. Have amount 100 minus H in equity and a balanced amount in your preferential assets like gold, bank deposits, bonds, or any other things you want. So sometimes if market is down, you can use amount from alternative sources of investment to meet your immediate or emergency needs. So the other thing is financial advisor is also other break. How? Financial advisor, he or she may be from your family also, your wife. Females are best at managing money. They can guide you how to, where to invest, how to invest. Even if you talk about other things, MFI qualified persons are qualified enough to give you good advice. with their proper training, with their focus on investment advisory, can act a good source of wealth creation for you. So sometimes what you do is we are following direct plans. We are not aware of what portfolio manager is doing. There may be some bad news at any of the funds. The fund may not be performing. Advisor, financial advisor, being into market, being a market intermediary, having better knowledge than that in that very particular area, can act a good break for you. He can guide you when to exit, how to exit, and when to re-enter. So every new website, business newspaper, TV channel, CNBC, Avada, or any other thing can give you best funds to invest into. But when to exit cannot be given by anybody than the financial advisor, who, being intermediary and having full knowledge of this particular field, may advise you when to exit, when there is some bad in the thing, so that he can give you alert. He can apply brakes where it is appropriate to apply brakes, like car. You apply brakes in car when there is somebody in front of your car or there is probability of accident. Just to avoid that, you apply brake. Same is the financial advisor, who also act as a brake for you. What's going to change? What's going to change? Change is law of nature. It's universal law of nature. Everything has in the universe has to change, and change is a rational thing. You cannot resist. You should not resist change, and you cannot stop change. We have already seen at the start of the lecture that everything has changed. How India has changed, right from mode of transport, what we were using, to cooking, what we used to cook, and how now we are used to cooking our things, our food preferences, our way of communication, way of traveling. Everything has changed. Energy production, from thermal plants to wind energy or to solar energy, everything has changed. So whether change is pertinent or not, yes, sometimes change is pertinent, but sometimes some things are there which are not going to change. It was asked from founder of Amazon, Job Boys, what is going to change? He said there will be no change. He said there will be no change. In the next 10 years, I will keep on selling goods to the masses through online mode. I will reach each and every house through online mode. So what he was of the views, he said, I will make habit in the minds of people to apply online, and then my company will deliver the goods desired to them at their doorsteps. So he said, change? No, there will be no change. When asked about change, he said there will be no change. So I think it also applies here. Just see the example. In this example, we have taken 12% return as a just example sake. It may be low, it may be higher. I'm not going to comment upon that. But for our practical purposes, for our, you can say, illustrative purposes, sorry, not practical purposes, I've taken this 12%. So 2% were there, Rohit and Mohit. This is fictitious name of the persons, Rohit and Mohit. They are of similar age, started their financial journey, the employment journey at almost equal age. Rohit was a disciplined person. When he joined his job, he started investing rupees 5,000 per month in a SIP. In a disciplined manner, regularly, without any default, keep on investing 5,000 at the and return assumed for 12%. So he invested till the age of 55. That means for 30 odd years he has invested. For total amount invested is 18 lakh. 5,000 into 30 years means 30 into 12. This much years, and 5,000 means 18 lakhs total he has invested. At the age of 55, his corpus was 1 crore 76 lakhs. How? Because two things are there here. Number one, rupee cost averaging. Number two, compounding. So over the last 30 years, the compounding effect has been there on his investments. And the other thing was rupee cost averaging. So he has having 1.76 crores in his kitty. Then let's we talk about Mohit. So Mohit also started investing, but at a later stage, at the age of 45. So his month, because he was late, so he decided to invest higher amount of money, so that by the age of 55, he must invest minimum 18 lakh rupees, which Rohit has already invested. So he just calculated and come out to a figure of 15,000 per month. Same rate of interest 12%. At the age of 55, he has invested for 10 years, 15,000 per month, 18 lakhs he has invested. So his corpus was only 34.85 lakhs. Why? Because time period was very short, 30 years, 10 years. So compounding was very low and the rupee cost averaging was very low. So his 18 lakh could grow only up to 34.85 lakhs as comparison to amount of 1.76 crores in the kitty of Mr. Rohit. So what is not going to change is your investment behavior. You have to behave in a disciplined way. You have to start early. You have to invest regularly. So all these things, 8 things we had already read, is not going to change. So your amount of kitty was low because you were late in your investments. Cost of delay. I need 5 CR at the age of 60. So, I'm assuming a rate of interest of 12% per annum. So, if I started spend 12% rate of return is there, and 5 CR is my target. So, at the age of 25 years, if I'm of the age of 25 years and start investing, I need only 7,700 per month to reach at a kitty of 5 crore at the age of 60, assuming the rate of return to be 12% per annum. But if I'm not going to start at the age of 30 years, so 5 years delay in investment will cost me double the amount. So 7,700 at the age of 25, so it becomes 14,000 at the age of 30. So that means at a gap of 5 years, the cost of delay of 5 years has doubled my monthly outflow by double the amount. If we start not at the age of 30 but 35, so 14,000 at the age of 30, 35 years of age, 26,000. That is almost double the amount which I was supposed to invest monthly at the age of 30 years. So in the age of 40, it comes out to be 50,000. So it is almost double the amount of amount which I am supposed to outflow monthly at the age of 35 years. And same is the case with amount 45 years. Instead of 50,000, around 1 lakh I have to invest monthly to reach at the age of at a figure of rupees 5 crore when attaining the age of 60 years, assuming the interest rate to be 12% per annum. So just see, your 1 day delay is going to cost you heavily. So just see, if you delay your investment outflow by 5 years, you have to spend double the amount which you used to save at 5 years earlier. What's not going to change in next 10 years is basically your returns, your investment behavior. If you are non-emotional investor, then your investment returns will be higher. Non-emotional investor means you kept on investing whatever the circumstances are. There be any breaks, any circumstances, you will not develop away from your investment strategy. You will keep on investing, and you are not going to stop your SIPs. So your investment return will be higher. But if you are emotional investor, then there was some breaks. Twin Tower incident is there, global crisis is there, Shining India crisis was there, Iran was there. You have stopped your investments, your SIPs for some period. That means have basically played with your probable returns. That means now you have allowed your returns to affected by your emotional behavior. So your returns will be low. Change is good, but sometimes no change is also good. So that means if there be anything, don't change your emotions. Don't go by emotions. Go by your conviction. Go by your goal. Go by your conviction. What you want to need. So lifetime returns is equal to investment returns plus investor behavior by two over two. Okay? So the thing is, sometimes we are always saying change is universal, change is the law of nature, change is expected to take place, but sometimes you have to have control over your emotions. And if you are having control on emotions, you will get definite good returns, and there will be no change in your returns. You will get good returns. Comparison is the thief of joy. It's our story number 5. Comparison is thief of joy means everybody has their own its own characteristics. So we shouldn't compare one with another. One is having its own characteristics, own strong points, own weak points. Other will be having their own good strong points or something like this. So we should not compare. So here is a story of a crow. A crow was there. It used to cover the distances, flying from one tree to another tree, to one place to another place, and he was very much free, feeling very happy. Whenever he wants to eat something, he just fly over and take the thing and satisfy himself. Very free, roaming around whole of the day, and during night he comes out to his nest. So very happy and enjoying life like anything. So no complaint with anybody. One day he saw a swan. When he saw a swan, he just looked at his own appearance and then on swan. He was very was black in color, and he was not liking his color. And on the opposite side, swan was total whitish complexion. So he said, the person must be enjoying, the swan must be enjoying life. He's so sweet, looking very good, must be attraction of the public at large. So let's just see what life he is enjoying. So I must be like this only. Let me go to him, to Swan, and ask about his experience, how he's enjoying life. He's very happy. Alas, I should have been a whitish. Things would have been totally different for me also. Anyway, he flied over to Swan, asked the question, how lucky are you? God has given you a perfect gift. You really deserve this gift. You are very white. Everybody likes you. People enjoy you are walking on the water. And whatever you want to eat, you can eat your food from water only. What a life you are enjoying. Swan said, very right. No doubt, I like my color. I am very happy. I was very happy. And my life was going very in a very well behaved manner, and I was enjoying each bit of my life. I had no regret with anybody, and I was always thankful to God for giving me this complexion. But one day, as you see, what I saw colorful parrots, and I was totally amazed by the color they were having on their body. What a creation of God! I was totally fascinated with the colors they are having on them. And that was the day when I felt dejected. God has not done good with me. I have given only one color, but they are totally colorful. And wherever they go, people cherish them, people love them, people make you to see them, people chase them, try to chase them, try to catch them, and they are the fancy of each and everyone. And everybody, whenever these parrots are there, nobody takes any look on me, and everybody is talking about parrots. What a life they are having! Really, I'm very much. I felt very sorry for myself, and really, I must say, these parrots are very lucky. Then, what happened? Crow fly to them, these parrots, and told them, "Ki yaar, what a lucky you are! Just see, I am very much black. People don't like me. Whenever I go, people used to throw stones on me, and even they don't like my voice. What when I am doing, people are not liking it, and they throw stones on me. Nobody likes to look at me, and you are very lucky. You are fascinated by you. Everybody is fascinated by your color. Everybody chases you. Even Swan praised you a lot. He was feeling jealous of your colors. I am saying from a distance that each and every person in public likes your colors. They are making you to see you. They are trying to catch you. Your voice is very sweet. Everybody is enjoying your voice. What a life you are having. You are really, really very lucky. Now it was a turn of the parents to speak. They said, "Yes, you are all right, my brother. You whatever you have said is very right. We are thankful to God. Rather, we were very thankful to God that He has given us a very good creation, colorful appearance, and even Sven has appraised us. Appraises is very fine. No doubt, there are reasons he can feel jealous of us because of the color protection we have got. People are trying to catch us so that they can keep us in their cages and all. But what happened is, I was very much, we were very much convinced by the color given by God to us. But we were enjoying our life. We were having uh, all the goods, and we were thankful to God for all these things and enjoying life like anything. But one day, what we saw is a peacock. When we saw a peacock, what a creation! When there is rainy season, how he dance. Oh, what a great experience! And everybody is fascinated by the dance, the peacock, and people lined up to just see the dance of this peacock. We couldn't dance, though we can fly. We can fly from one tree to another tree, but the way people are fascinated by the dance of this peacock, and peacock is heartthrob of each and everyone, and especially during rainy season, we are really missing that race. Anyway, now just see, Crow was not was feeling very much independent, free from each and everything, and he was thinking he is totally free till he saw the swan. When he saw the swan, he started comparing himself with swan, and when he went to swan, he came to know that swan is also was very much contented till that he has saw colorful parrots. And colorful parrots were very much satisfied. They were thrilled. They were enjoying life like anything. They were free of all the tensions until they have seen peacock. After seeing peacock, they were also feeling very insecure, jealous of peacock. So Crow went to peacock. He said, friend, really you are great. You are lucky enough. God has given you such a fabulous things. In that whenever you dance, people just enjoy your dance. And this is not only my words, but words of parrots, and even Sven was also of the views, because your creation is totally different. What a colorful appearance you are having. You must be enjoying life. Peacock said, my friend, whatever you see is not the actual thing. You are very lucky that you are in a free environment. You can go wherever you want to go. I am in a cage. I am in a zoo. So whosoever is standing here are seeing me when I am in my cage, and they are just in the in the zoo to see me. So, my friend, my area of operation is in this cage only. I cannot go out of this cage. You are lucky enough. Parents are lucky enough. Swan is lucky enough that you all can fly, walk, or whatever you want to do. You can free to do. You can eat anywhere. You can go anywhere. But my area is this only. What is the fun of beauty when I cannot move, I cannot enjoy, I cannot go out of the this area out of my own sweet wish. So, my friend, whatever you have got, have faith in that, and you are lucky. Mind, it appears to you that I am lucky, but I am not happy at all. I am not happy at all. I will say you are lucky. Parents are lucky. Sven is lucky, but I am not, because I cannot move as per my wishes. So, my dear friends, comparison is thief of joy. Till date, Crow was not comparing until he saw the sound peacock. So when they started comparing with each other. The joy has gone out of their hands. So the thing is, never ever compare anybody with yourself with anybody. Everybody is having their own strong faults and weak faults and anything. So comparison is thief of joy. So same is the thing. So don't think you are not having good funds. The other person is having good funds. Just see. I'm giving this. I'm giving this chart to you, in which there are large cap funds for last 10 years, which are having fund A, B, C, D, E, F, G. 8 funds are there, which are in which we have seen right from year 2012 to 2021, out of 3 funds out of 10, they have topped 3 years. They have topped after 10 years. Out of 10 years, for the 3 years, Fund A has topped in the category. Fund B has topped into 10 out of 10 years, and other funds have topped in 1 year each. Still, they are giving almost same rate of interest. So same return to the investors. So don't look at the funds the other person is having. If you are having fund A, having fund B, fund C, fund D, fund E, fund F, fund G, nothing matters. There may be only a fraction of difference in the returns. Almost every returns of each and every fund is equal. So don't compare your investment with another person's investments. Have conviction in your investments. Don't lose joy. Don't compare your funds. The other person is also having large cap funds. The returns will be roughly same. There may be a difference of 0.1% or so, but these are almost same returns. So don't ever compare these returns with the returns of other persons. Diversification plays a vital role. And this is a period from 2011 to 2022. Just see, in 2012, 2016, mid-cap funds were on the top. But in 2011, 13, 18, 19, and 22, large caps were on the top. So in 2011, even you can see large cap funds have given a return of -26 as compared to multi cap -27, mid cap -31, small cap -36. But the thing is, if you're having combination of these three funds, mid cap, large cap, small cap, then diversification of funds is there. So your loss will be lower and your returns will be higher. So you see, small cap funds have given in 2014, they have given 70% return. In 2015, 10% return. 2017, 57% return. 2020, 25% return. 2021, 62% return. So always have a kitty of diversification. That means you must have all the three: large cap fund, multi cap fund, or mid cap funds. In multi cap, large cap, mid cap, small cap. Blend of all these four funds in your kitty so that you can maximize your return. So don't compare in large cap with mid cap, with multi cap, with small cap. Have all the funds in your kitty. You just see red one is your orange one is your cap, and bluish is small cap. So the thing is, if you see all this in together, you will always in a profitable sense. If I talk about 2011, if you have all the funds, your average will be lower than the whole of the group. In 22, you see large cap 4%, mid cap 4%, multi cap 3%, small cap -4%. So your return will be 7% positive. In even 21, you see your return is very good. So have a diversification which is going to play a vital role. It is a basically winner's strategy for you, win-win strategy for you. So don't compare, have all the things in your bag and enjoy your life without any you can say blame or something like this. Asset diversification is also vital for your things, because you see in March in 2005, 2006, 2007, equity was on the top. In 2010, equity was on top. 14, 15, 17, 18, 19, 21, 22, equity was on top. But in March 8, when there was global crisis, gold was at the top. March 2009, gold was at top. 11, gold was at top. 12, gold was at the top. When there was a European crisis. Then March 16, gold was on top. And in March 20, when Corona has just come, when announcement of Corona was there, gold was on top. So at the time of Corona, when there was lockdown, gold was there in the stores, no jewelry shop was opened. The stock get appreciated in the closed shop by 32%. As you see in other things, March 13, CPI was on top. So the thing is, you must have blend of all the assets. That was sometimes hybrid portfolio is up, sometimes that is up. So asset diversification is also a thing to have wealth, create wealth. So try to diversify your assets in such a way that you can get a good amount of return. So always go for asset allocation, asset diversification, so that you can have good amount of returns and you can create wealth in a better global diversification. You see, sometimes it is always better to have foreign participation. And through mutual funds, you can also invest into global funds also, global markets also. So now 2009 India, 2010 India, 2011 US market was up, 2013 US market was up, 2015 US market was up, 2017 China market was up. So if you are having a good amount of if you are having if you are having blend of all the markets, means you are having funds from US, funds from China, funds from world, funds from Europe, funds from Asia. There are so many mutual fund schemes which are investing into US funds, which are investing into Asian funds, which are investing into Chinese funds, which are investing into European funds. So have some of the taste of these funds so that you can get a good amount of your money. So to maximize your return, diversify your assets into global investments, into investment in different asset class, so that your return should be higher and your wealth creation goal can be achieved in a better way. Moving ahead, it is the story of a lord and sweeper. Lord is Bhagwan. Sweeper, the person who who was cleaning that very temple. And there was a temple and huge idol of Lord was there. Up sweeper daily was employed there to clean the temple premises daily on a daily basis. So what happened is he was just looking. People are coming to the temple. They bow their head in front of idol and offer and offering good amount of cash, other things, present, etc., prasadam and all these things. And sweeper is and idol is not doing anything, just standing only. Sweeper is cleaning all the whole of the premises daily. It's a very tedious job, and he got tired, but he is getting very bigger salary. So he was very unhappy, and he always he was of the view that God is basically doing is enjoying life, and I am the only person who is very much you can say unsatisfied. I'm not paid fully for my job and getting very less job, and God is just standing only and getting very good offerings. So what he does is every day he complains this thing to God. Day 1 to 10, 15 months and years. One day God decided to swap the position. He called sweeper. He told him to do one thing. You come to my place and I will go to your place. But one thing is for sure, as when I am standing tall, I am not doing anything. I am not talking. Whatever I am doing is, I am just observing people. Whatever they do, I let them do. I don't interfere into their things. So I don't like to interfere into their rituals. I kept quiet. I just stand there, and they have faith in me. They are bowing heads in front of me. So you have to do same thing. You will stand over there as I was standing. Don't interfere into them. Whatever they are doing, just ignore. And then I will be a sweeper, and you will be the Lord. So he said, okay, sir. Okay, Bhavanji, this is a very good thing I can do. It's a very simple thing. You have to keep quiet, and you have to stand only, and you have to just look at the people. Whatever they are doing, you are not supposed to interfere. And this is very easy job. I will do that. What happened is, when they swapped the positions, sweeper stood in a standstill position over there. One person came to to pay his homage to the god. So when he was offering his when he was bowing his head in front of God, his wallet fell on the floor, and he was not aware of these things. He just bowed in front of sweeper, who was acting as a god, and went away. After some time, one thief came to the premises. When he entered the premises, he was very much dejected. I'm not having any food for the last so many times. God is so cruel to me that he didn't make any effort to provide food to me and all these things. He was abusing God and something. Suddenly, what he saw is there is a wallet on the floor. He just picked up the wallet, just found that there are so many currency notes there in the wallet. He said, God, जब आप देखते हैं तो छप्पर फाड़ के देते हैं. You are giving such a huge amount of money I was not aware of. आपने तो इतना बढ़िया कर दिया. You have done a great job for me. Now I can eat whatever I want to. My children will be very happy and all these things. So he happily went away with the this wallet. Once he left the temple premises, another person came to the temple. He was a merchant navy person. He was a businessman who goes to different places through ship, and he was a sailor basically, and used to go to different countries for sale of his products. So when he came to the mandir, he bowed his head in front of sweeper, come Lord, and when he stand up and went he just want to go out of the temple premises. Suddenly, the first rich person whose wallet had fallen from his pocket entered the temple premises along with police. He just point out at that very businessman to police wala to catch hold of that businessman after me, that this is the only person who has come to this temple premises, and he must have picked up my pocket, and he should be arrested. He told police wala ki I have not done this, but police wala forced him to come this forced businessman to accompany police wala. When police wala was ready to take away businessman, suddenly sweeper Lord come sweeper started saying something to the policeman that this businessman is totally innocent. You just release him and catch hold of the thief who has come went just before businessman entered into the premises. Go to this thief house, arrest him, and leave this innocent person. When this happened, what they have done is policeman released businessman. They went to the house of thief and arrested him. When this happened, God came out of his place and then told sweeper that I have told you specifically not to enter into the whatever is being done by the public at large, by the these devotees. Why you have interfered? By interfering into life, done a blunder. Sweeper asked, how I done a blunder? Then God told him that what happened is there is going to be a tufan, storm in the city, and going to sea is a very dangerous thing. Now, what you have done is you have asked policeman to release a businessman. He will go to sea and he will start his sailing. He will be no more as this storm is very, very strong. So I had made this arrangement so that he could be rescued. When he will be in jail for 2, 3, 4 days, he then by that time storm will be over and he will be saved, and after 3-4 days, already when he will be interrogated and the total investigation is taken care of, automatically thief would have been arrested and sailor will be freed. By that time, the thief will get food in the jail and sailor life will be saved. When storm is okay, is off, then he can sail properly. But by doing this, you have endangered the life of sailor. So same is the case here also. Don't try to time the market under greed and fear. Don't interfere. Don't try to interfere in the market behavior. So you just see investment in particular fund. So one person is there. His name is Cash. He has started his SIP from 1st of April 2006 and it was 31st of March 2009 because in 2008 there was global crisis and when market was not going upward, he decided to discontinue his SIP on 31st of March 2009. SIP amount was 10,000 per month. Number of years was 3 years. Principal amount was 3 lakhs because 36 months have elapsed. 36 months into 10,000, 3.6 lakhs amount was there. And because market was down, so he could get only 2.9%. And his absolute loss was 0.7%. Can it be down? So what happened is, so his internal rate of return was 0, not applicable. Now what he has done is, now when he got 2.9 lakh rupees, so he said market is not behaving in a proper manner. Better to invest this amount into some other instrument, and he invested that amount on 1st of April 2009 into FDRs. Okay, so he invested into FDRs. So how much he shifted from fixed deposit to shift to fixed deposit. So on 1st of April 2009, he invested into FDRs and till 30th of December 2022, he stayed with FDRs only. So what was his principal? 2.9 lakh principal he has invested into FDRs and maturity amount was 8.4 lakhs. He was having absolute gain of 5.5, 8.4 minus 2.9, 5.5 lakhs he gained, and the internal rate of return comes out to be 8%. Then December 30th, 22, he realized that market is a good option. I have created blunder by going to FDR. So what he has done is on 30th of December 2022, he started his SIP. He discontinued with this FDR. So 8.4 lakh amount was there with him. So he started 20,000 per month. He started another SIP in the month of April 13. Till 30th of December 22, he had a SIP of 20,000 per month for 9 years, 9 months up to 30th December 2022 from 1st of April 2013. So total amount went into SIP was 20.4 lakhs. A maturity amount comes out to be 49 lakhs. He has a gain of 25.7 lakhs and his internal rate of return from SIP comes out to be 14.6%. Now, if we total all these things, he has invested he stayed invested for 16 years and 9 months. He has invested total amount of 27 lakhs, 3.6 lakhs plus 23.4 lakhs. So 2.9% he has invested from this amount only. Na? So 3.6 plus 23.4, he has invested 27 lakhs. Maturity amount was 57.4, 8.4 and 49. 8.4 plus 49 is 57.4%. His absolute gain was 30.4% and his internal rate of return was 10.7%. See the other person, Yash. Yash started his SIP as equal to Jash on 1st of April 26, but he stayed only and only in SIP, in market, in equity only. 10,000 SIP he started along with Jash. So 16 years and 9 months, he stayed in only one asset, that is equity. He has invested 20.1 lakh in equity. His maturity was 75.6%. That means his absolute gain was 55.4%. So his internal rate of return was 14.3% as compared to return of 10.7% of Mr. Jash. So that means he didn't interfere into the market, but just tried to interfere into the market, tried to be over smart, tried to be clever. So by acting, interfering into market, or by trying to time the market, he was at a loss by 3.6%. So never ever try to time the market. If Yash could have invested 27 lakhs as invested by Jash, if Yash had invested amount equal to Jash, Jash has invested 27 lakhs. If Yash has invested 27 lakhs monthly SIP of 13,567, instead of 10,000, if he had invested 13,537 per month, he could have invested 27 lakhs, and the value of which could have surpassed 1 crore. So just see, by following discipline without interfering into market conditions, what he has done is he has invested a good amount of money. He has created a good amount of kitty with him. So never ever try to interfere into the market behavior. Never ever try to show your greed. Never ever try to time the market. Keep your greed and fear under control, and that will be beneficial for you to grow your kitty. The biggest challenge to get optimal return is market volatility. Is okay? No, it's wrong. It's investor behavior. Market volatility is not going to hamper you. Basically, this is the behavior of investor. If cash has not is not going to discontinue his SIPs, he could have garnered the same amount of kitty which Jash has achieved 75.4 lakh. So investor behavior is the main thing which is going to be a biggest challenge to get optimal return. So keep your behavior under control. Don't interfere into market conditions. Don't time the market. That will not give you best thing. What is missing? Something is missing. Yes. That is direction is missing. North-south direction is missing. So when nobody is there to advise you, you tend to miss something, and that something is direction. So for better direction, you need advisor who can guide you, who can tell you the ways, tell you direction. So something is missing. So what you look at? Best returns and products? No. Best returns? No. Products? No. What you should look at? Goals. What are your goals are? And by looking at goals, you should go for asset allocation. You should go for product. And by keeping into mind goal, then you should choose your asset allocation, then you should choose your products. That is the right strategy. In earlier slides, we have seen if my goal is to have 5 lakh of kitty, 5 CR of kitty, 5 crores of kitty, so I have to see how can I get, if my kitty, my amount is to grow at the rate of 12%. So what I have done is, I decided to have a kitty of 5 CR. So at the age of 25, if I am investing this much amount into equity, I will get this much amount. So I have to, first of all, I have to have a clear goal in my mind. Clear goal will help me to go for a proper asset allocation, to choose proper product, and that is the right strategy. And there is no other alternative to all this strategy. If you are rich, you can buy whatever you want. If you are wealthy, you can do whatever you want. Okay? Rich can do can buy anything, but wealthy can do whatever it likes. So if you are wealthy, you have achieved your target. You are now you are here to live your life, to have good lifestyle, to roam around the world, to have good retirement life. So you can do whatever you want to. The only thing is you should be wealthy. The rich has money, the wealthy have the time. Why time? Because the main thing is our main time is basically wasted in earning. So one must have passive income. Passive income can be there by wealth creation. And once wealth creation is there, you are free from all the tensions. Now you can enjoy your life. You can have lesser dependency on your children. You need not to rely upon pensions and other things. You can enjoy life in a better way. So, five key takeaways from this is in front of us. Number one is equity is one of the best wealth compounder. I have already said it to you that if you want to have wealth creation, equity is the only and only way. No doubt you must go for asset allocation, but the dominant part of your investment should be into equity and equity only. As per your age, you can have some taste of gold, FD, bonds, etc. But major portion should go to which thing? Equity and equity only. Ignore noise and invest for long term. You see, whatever the breaks are there in the economy, whether it is dot-com bubble, Iran-Iraq war, 2004 BJP defeat, any other thing, global crisis, anything. So whatever the negative news, don't pay any heed to them. Keep consistently towards achieving your goal. Your goal is paramount for you. You have to have your kitty. Whenever there is any crisis, any break, the very next year market bounce with leaps and bounds. So market rebounds with leaps and bounds. That means don't worry. It's a cycle. After every certain time, market is going to rebound with the accelerated speed. So don't worry, ignore all the noises, all the negative news. Don't rely upon TV news, newspaper news. It may be a paid news or something like that. You just follow your consciousness and keep on invested. Stay invested. Stay disciplined, and try to create wealth as much as you can. Don't time the market. Don't interfere into the market. Keep your greed and your fear in control, and don't interfere into the market. If you have a goal, just uh, let your goal be completed. Before completion of goal, don't lose your attention. Don't lose your direction, and just work toward achieving your direction, your goal. So don't time the market. Diversify. Diversification is the key to wealth creation. And diversify into different funds, diversify into different asset class, so that you can have proper wealth creation. So diversification is key to any of your success stories. It can give you good amount of wealth. Invest regularly and step it up. So we have already seen it 10,000 per month for 340 months. We have invested 34 lakhs. That became 10.5 CR, 10.5 crores. So keep on. Why it had been at such a good amount? Because there was no break in our investment. We kept on regularly with discipline every month without default, whether there is any crisis, no crisis. We kept on investing 10,000 per month. That is why 34 lakh could contribute to creation of wealth to the tune of 10.5 crores. So one thing is invest regularly, the other thing is step it up. Every year increase that very investment by 10% at least, because you are getting every year 10% inflation or something, taxation effect and inflation making it together is around 10%. So invest regularly and step it up by minimum 10%. And we have seen by stepping up stepping up by our investment by 10%. What we have done is in 340 months, we have invested 1.65 crores, which turned out to be more than 19 crores. You can say roughly it is close to 20 crores. And see how much extra wealth we have created. So these five key takeaways one should always keep in mind, that equity is one of the best wealth creator. Ignore noises and invest for long term. Don't time the market. Diversify, invest regularly, and step it up. So, my dear friends, till date we have covered our wealth creation. We are basically going towards wealth creation. We are human beings. We may face any of the emergencies. That will be the person is investing something. Now he is investing 10,000 per month, and what happened is he felt the pain in his chest. So when he went to doctor, to a hospital, he was diagnosed with blockage in heart. So when he was diagnosed with blockage in heart, doctors suggested him to go for angioplasty or for surgery in next 7 days. To hospital counter gave him a expected bill of 7 lakh rupees. Now he had just started his SIP. How come he be in a position to spend 7 lakh rupees? If he is going to spend 7 lakh rupees from his SIP, from that means his goal is going to be deviated. His goal is not going to be complete. And what to do? How to do? Okay. He can very well arrange 7 lakh rupees from his existing investments, because he was investing for the last 3, 4, 5, 7 years in SIPs regularly. So he is having good corpus. He can definitely withdraw 7 lakh from this kitty. But what will happen to his goal? He will not be in a position to achieve that goal. Now 7 lakh for surgery, and he may be requiring money for post-surgery things. So the best way is what he should arrange those funds required for medical emergency through health insurance plans. I have already told you that once you are investing into equity market, always follow the rule of 100 minus age. 100 minus age means 100 minus, suppose I am at the age of 25 years, 100 minus 25, 75% into equity, 25% into other than equity. So when I am talking about other than equity, so the 25% amount, first of all, I will go for health insurance plans. If I am private sector person, I am self-employed, I am a petty shopkeeper, whatever the case may be. So I have to have my health plan in my hands. So what it will do, it will help me to achieve my goals without any tension. In case of emergency, the insurance company will look after my well-being. Insurance company will arrange funds for my health. So the thing is, when I have invested 100 minus age into equity, and that age amount equal to your age, first of all, you buy a good plan. So the best way is to have a plan for a sum assured of particular amount. That would be 10 lakh sum assured plan I have bought, and then I must bought a top plan of 30 to 40 lakhs. So my 50 lakhs insurance premium will be good for me and my family, because nowadays medical cost is very high, and after Corona, it is always advisable to have good health plan. So the 25% which I have not invested into equity. So first of all, what I will do is I will buy a good health insurance plan. So which type of, it should be comprehensive insurance health plan. It is always better to have health plan when you are healthy and free from any of the disease. At an early stage, it's always advisable to buy any insurance plan when you are healthy and hearty. So because at that time, nobody will refuse you any type of insurance plan. Once you are not healthy, when you have some disease, then it is very difficult to have some insurance. Or if you are going to get insurance, it will be very expensive for you. So once you are health and hearty, go for insurance plan. So buy 10, you must offer 10 lakh sum assured and around 40 lakhs of top up. If a person is at the age of 25,000, so he will get a 10 lakh health insurance plan for his family for roughly 22,000 odd rupees, and 40 lakhs sum assured of top up amount will cost him not more than 6,000-7,000 rupees. So better to plan your health insurance so that in case of any health emergency, you can take that health insurance plan can take care of your emergencies. What it covers? It comprehensive health insurance covers all your hospitalization expenses, day care treatments, pre and post hospitalization, medical bills, and more. Try to have that very health insurance which is comprehensive in all sorts. Means it is covering your consumables and pre and post medical, day care, and each and everything. Pre and post means prior to hospitalization, whatever you are spending on your treatment, you are having medicine also. So 60 days before hospitalization, 180 days after hospitalization, this is the best plan. So it will cover you around pre and post hospitalization cost. It is going to cover whatever cost you are incurring in the hospital, that will take care of by the insurance plan. And day care treatments, there are so many treatments which WHO has covered as day care, like cataract. It is a day care treatment nowadays. There are so many things which are now being operated upon with the help of laser technology. So these are day care things. So these are covered. To protect your family from huge medical health care expenses. Now, we have talked about wealth creation through mutual funds, equity, and health insurance plan that is called HIP. Now, the other thing is term insurance plan. What is term insurance plan? I'm a breadwinner of my family, and I'm earning a handsome amount of money, and my family is basically living a very handsome, very good life. We are enjoying a particular level of living, or a particular standard of living we are enjoying. What happens? I met with the next year. So, what happens? The investor got severely injured in a road accident and died when he was 45 years of age. The person is gone. Now, health insurance is of no use because person is gone. But what would be impact on the family? Family has to live its life. Life for family has not come to end. Only the breadwinner has gone. So who will pay the household expenses? Family. Who will pay school fee of the children? They are studying in the schools or colleges, whatever the case may be. Who will pay for SIPs? The person must have a regular investor for a goal. So who is going to pay amount for the SIP of the family? Who will pay health insurance premium and other daily expenses of the family? So somebody is there, must be there to take care of all these things. So to meet out all these integrities, it is always better to have a good amount of term insurance policy. So what is term insurance policy? Term insurance policy is a very simple policy without any ifs and buts. Always choose in that company which is having very good track record of payment of claims, settlement of claims. So any company which is having more than 96%, 98% of claim settlement should be chosen for the purpose of term insurance. So what term insurance covers? Term insurance plan covers that any reason. So if a person is has fallen and is no more. A person met with an accident is no more. Person is suffering from some disease and has died. So each and everything is being covered by a term insurance plan. So that due to any reason is being covered by a term insurance plan. The thing is, in case of term plan, if a person survives, those persons taken term insurance policy up to the age of 80 years, and he survived till the age of 80, no benefit will be given to the person. Only because he survived, he is not dead. So no no benefit will be given to the person. And the best part of this is, in case person is no more, the family is taken care of. If the sum of amount is 1 CR, 2 CR, that amount, when the family is going to invest into any of the instruments, that will give a good handsome amount of earning to the family, and family is in a position to maintain same standard of living. So this will provide financial stability to the family. We are talking about wealth creation, we are talking about health insurance, we are talking about term insurance plan. Now, there is another plan which one should also take out of the amount 100 minus age. So the age amount, the amount referring to the age. So that amount which I was talking about to invest into different asset class. So one should also go for a personal accidental policy. You are taking bath in your house. You just slipped in the washroom and got fractured. You are got injured. You have been hospitalized for hip fracture or any thing. For that matter, you are not in a position to attend your office. If you are having your policy of personal accident, this will cover your loss of income also. So any personal accidental insurance, if you have taken that, and if there be any accident and which there is loss of income, so personal accident insurance covers your monthly income up to 100 weeks. So whatever your return is divided into 52. So your income is divided by 52 based upon the last return filed by you. That income is divided by 52 per week. Income will be calculated, and suppose the person is admitted to hospital for 10 weeks. So every week amount equal next amount equal to 1 lakh rupees, or whichever comes as per calculation will be given to the person who is having personal accidental policy. So personal accidental policy means any accident. It can be accident by sleeping in the bathroom, or you are you slipped on the staircase, you were in the market and somebody hit you, or you met with an accident. Anything, any injury from by any means is covered under personal accidental insurance. So if you are hospitalized or you are unable to perform your duties, collarbone fracture is there, or anything is there, and you are not in a position to operate computers, you are not in a position to operate the computer properly. In that case, what will happen? An insurance company will give you a compensation based on your income every week up to maximum of 100 weeks, which will help you to run your household expenses in a better way. So your family is dependent on you for everything. It may be EMIs, it may be child higher education, household expenses, car loan, child marriage, family health. So ensure they receive it even without you buy an adequate insurance cover today. So adequate insurance cover covers your all three insurances. It may be health insurance, it may be term insurance, it may be your personal accidental insurance. So this will, when you are buying these health covers, this will not impact your SIPs, your amount being contributed towards your achievement of goals. So this will go other way. So this will not disturb your things. So what are the benefit of term insurance policies? It is a very simple policy, or it is nothing to calculate much. It is very simple. When person is no more, amount is given to that person. Very low premium are there, so nothing to worried about. You can do nowadays. Term insurance policy are coming with return of premium amount. Suppose I have I'm at age of 25 years. I have taken the policy to the up to the age of 80. So what will happen if at the age of 80 I am a survivor? I am a living person. So whatever premium I have paid will be returned back to me. In this case, premium will be little bit higher, but you will receive all the premium back once you are alive. So in that case, even if you are alive, you are getting back your premium. But in that case, there will be no low premium, but premium will be slightly higher. So whatever you are contributing to this term insurance plan, you are getting benefit under Section 80C if you are opting for older tax regime, old tax regime. So you will get benefit under Section 80C of income tax. And same is the case with health insurance policies. So what we have done is start early. Delay of 1 year can result into lesser wealth creation. Save regularly, invest regularly in right asset class. Take health insurance when you are fit and take as early as possible, because once you are diagnosed with any of the disease, then it will be difficult for you to approach health companies for health insurance. Then they may refuse health insurance, or the premium may be higher for you. Take term plan before any investment begins. Term plan is the base of any financial plan. And also, I'm adding here, take a suitable personal accident insurance plan. It is very, very cheap. You can have 50 lakh insurance at a bigger premium of around 5,000. So my conclusion is it's time to change, and one has to adopt the change. Opt for investment rather than savings to create wealth in long term. So don't go for savings, go for wealth creation. So wealth creation means go for investments. Investments are the new thing. Like your changes in way of tourism, way of cooking, energy creation, and all these things. Discipline and patience are must for investment. So you should be disciplined. You should be patient. Follow them. Don't try to time the market. Let the market behave in its own way. You set your goals and just have direction to achieve that goals. Advisors who have qualified qualification with them can help you. He, she may be your sibling, spouse, or anyone. And I have already told you, females are very much able to give you good, you can say, safeguard money. So start early, invest regularly. Don't delay investment decisions, make goal-based decisions with long-term horizon. So long-term horizon should be there, and with goal. Without goal, without direction, everything is a wasteful expenditure. Always have coverage of term insurance, accident insurance, and health insurance, so that there is no pressure on your investment in case of any emergency. We have seen if there be surgery, heart surgery, 7 lakh rupees. When you are having health insurance, now health company will pay. You need not to disturb your investment plan. Your SIP will continue in its own manner. It will not be disturbed. So health insurance company will pay out of their coffers, and you are not to bother about that. Same is the case with accidental insurance. If accidental insurance is there, if there be any accident and you are hospitalized, or there is loss of income of yours, your SIP will not get disturbed, because whatever you have lost, your loss of income will be covered by your health company or your insurance company. You can be in a better way to concentrate upon your achieving of your goal of wealth creation. So have this and term insurance to safeguard the interest of your family. In case you are no more, your investment should keep on growing. Your children education should be there. Your household expenses should go as it is. Your EMIs be taken care of. So all these things are conclusion that are the main thing is discipline, patience, and our wise decision towards our investment, towards our insurance plan. So that is all from my side. Thank you very much for your patience hearing.
If any of the participants have any questions, you can message in the chat. Sir, creating wealth did become easier. What a wonderful and insightful session. Undoubtedly better and productive than any weekend plan we could think of. Rightly highlighted by you that the times have surely changed, but the importance of money and wealth can never change. Creation of wealth is the right balance between risk and profits based on leap of faith, consistency, longer duration, and diversification. On behalf of the Committee on Financial Markets and Investor Protection and all the participants, I express my sincere thanks to you for sparing your valuable time and imparting this ocean of knowledge to all the members today. Thank you so much, sir.
Thank you very much.
Thank you, sir.
I think we don't have any questions, so we can just wind up the session, sir.
Thank you very much. I am leaving now.
Thank you so much, sir. Thank you.
Thank you.